I'm going to wake you up. God, it's hot. Okay. So we're standing between you guys and lunch.
Sitting.
Sitting between. So here's what we're going to do. So we've got 3 of probably Silicon Valley's, I'm going to say, top investors. Because these guys are my friends. They're super smart. And they've done really amazing stuff. So quickly, this is Jeff Clavier from SoftTech, who's invested in August Locks, Fitbit, Coin, Halo, Postmates, and Red Cab. Then, Cap. Then we've got Tim Chang at Mayfield, Basis, Jawbone, Ouya, 3D Robotics, Lyft, and Rob Coneybeer. I got a lesson in that. From Shasta, who had a wonderful exit with Ness, Ouya, Servios, Relay Rides, and Flywheel. So we're going to get started and have a quick chat about investing, what the future is of wearables, and all that good stuff. So to kind of set the stage, obviously we're going to be talking about Internet of Things, wearables, connected devices, and that. So let's start with, what does a great team look like, and what are the skill sets that are going to be needed for this particular space? Given that for software, you guys love to invest in the hacker, the hustler, and the designer, what does that mean for hardware?
Well, it starts with an awesome product idea, because by the time we invest, the product never looks like the final product. Like Coin, when we invested, was a big piece of plastic, which was basically that big, definitely not a credit card, but Kanish made a really compelling vision and convinced us that he was able to actually deliver on the goods, because the issue is, once you have the concept, can you actually produce, mass produce, and go through all the hurdles, which is why all the companies are late, to actually getting a company from ID to actual device in your hands?
You've been thinking about this one for about 10 minutes.
Well, it's always different what you have. So there are some common characteristics. So you have some basic execution elements when you have a wearable. So there's the firmware, there's the mechanical design, there's the wireless connectivity, there's the kind of user interface software that you have. But every team is different from where it starts. And whenever I look at one of these companies, or I meet with one of these companies, I'm looking for somebody that has a strong product visionary and understands not just the product, but the story that they're going to tell around that product. But it always starts with a product. It starts with a product that you can see people using, they're going to want to use. It's going to lead to a high net promoter score, and then that's going to allow you to build a brand and acquire customers more cheaply. But it always starts with a great product visionary and designer.
For me, I look specifically for companies that have a device as a service business model, meaning heavy emphasis on the software and the services. So in a way, I'm kind of looking for software and service companies in a hardware wrapper, if you will. So that's a little bit different, because it means I want to see really strong software and services chops from day one. And that's not always the case, because sometimes teams might have more hardware founding background, they're learning software, or some companies are more software oriented and they're learning the hardware. You rarely meet teams that are fully complete from day one, like these guys have said. And the challenge is you're kind of having to build the Avengers, because you have to put all these different skill sets in place as the company grows.
So exactly my point. Right, so when you guys are looking at these hardware companies here, and not just hardware, but let's just call them wearables, because that's kind of open, right? You have to have certain skill sets when you're investing, or sorry, when you're building the company and when you're looking at investing in them. So what is this fine balance you can have when thinking about this investment, where you've got the mechanical engineers versus the software engineers versus deep experience versus product guys? I mean, how do you make that balance work, or how do you judge that?
It's really hard, because it's typically a mix of product, software, and hardware, which is sort of the core basis, and then an understanding of how hard the whole sort of manufacturing, tooling part is going to be, but you might not have those skill sets on the team when you actually get going. And certainly the world has changed over the past 6 years. So I invested in Fitbit 6 years ago, and those were the dark ages of hardware, where no one really cared about this nascent category of wearables, and so you couldn't get the manufacturers to pay attention to you. So you had to really figure out your manufacturing. The challenge is really can you find someone who has, as Rob said, a compelling product vision and understanding what it takes to build a mass market, mass appeal product so that you can sell this to millions of consumers. And that's why, even though we've been very successful with all our hardware companies, we only have done 4 in the last, 10 years and 150 investments. So it depends.
Right before, I'm just going to bring up August for a minute, only because, you invested in Fitbit. They were able to launch the product. August, which I can't wait still. I'm still dying to get that. And it's been a couple years now. So did Jason have that kind of a skill set when you guys looked to invest? Or what did he have that you said, that's okay? It's okay he doesn't have that, maybe he has this.
Mass market, mass appeal with, getting the August Smart Lock has been in different revs for a long, long time. He just wanted the product to be perfect. And that's what he will wait. And, as he said, soon you'll get your August lock. And each and every company that I know of or have invested in has been late. Like Fitbit was 1 year late. They said, we'll ship Christmas. But they shipped for Christmas 2009 and 2008, whatever.
So on that note, how was Basis or Jawbone? Were they pumping out product, or was that also a challenge?
For all of these, it's pretty challenging to assess what the team is good at, and we'll have to figure out. But the one question I really try to ask is, do the founders know what they don't know? That kind of sounds stupid, but what it really is self-awareness of your blind spots, because that will put a priority in hiring people that know those areas. And what I'm most terrified of, we'll just outsource manufacturing to Asia. We'll just hire PCH and just throw it a fence and it'll be fine. And that's never, ever worked, right? So you got to just have that awareness of what you don't know, and I really look for founders that have that. But even in Basis, we did our best to have a complete team there, and we lost 18 months in trying to get the damn thing, actually produced. All the specs were right, they worked their asses off, they executed flawlessly, but there's so many factors out of your control sometimes when you're going up the manufacturing curve for the first time.
Actually, that's great. So what do you see now that were some of those things that you just were out of your control that you wish you would have known about?
Well, one factor back then, we didn't have crowdfunding as a mainstream source for pre-order, and God, I wish we did. It would just be so much interesting, so much more interesting to have that demand generation up front. We had to have pre-orders, and we took credit cards, but those weren't clear if they could convert or not, right? If you could really collect those, and if you're more than a year late, you're going to see big fallout. And what I've seen with crowdfunding is you get basically 2 or 3 hall passes. Even if you're super over-communicative and transparent with your users, they'll give you a pass in the first one. Second time might be Chinese New Year, we didn't know. They shut down for a week, but by the third time, they're like, give me my effing product. You suck, you guys are thieves. And your biggest vocal supporters will be big-time haters.
It's surprising to me that more hardware companies don't go through a deep stealth program before they launch. And Ness was one, as everybody knows, that was completely quiet about what they did until the point that the product was basically available. The only reason that they even announced the Protect smoke detector about 6 weeks in advance is because they had to go through a public certification process with the government. So it was going to get announced anyway, so they had to do it at a certain point. But it is amazing to me that more people don't do this because hardware companies inevitably slip. And there are 2 types of crowdfunding. I mean, I think one is the one where you have the Indiegogo or you have Kickstarter, but the other is the pre-order campaigns. And Jeff, I think you're involved with 2 of the ones that have been really successful on the pre-order front. Coin and August both did beautifully executed campaigns. But you have to think about which of the 2 you'd want to do, whether you want to do a true crowdfunding or you want to do a pre-order campaign.
Can you just talk a bit about what do you mean by a beautifully executed campaign? What does that look like?
Well, I'll let Jeff start with this because he actually is an investor in both. I mean, I do have a strong point of view about it, but I'd say that just the high-level element is you look at it and it just spreads like wildfire, and it's very thoughtful how they spread in the social media and what you do. August had this piece where it basically posted your number, and if it grows, it's great. If it's like 10 days in and your number 100, maybe you're not that excited. But when it grows quickly, people think of kind of the social media thing of, I want to get it early and be right at the front of the line. Coin did this amazing job where if you went ahead and you pre-ordered, you'd actually get money back. And I'm friends with Kanish, and I really like what he's doing, so I just signed up for it. And it was shocking to me because I put it up on social media because I wanted to promote it, and then I ended up having it paid for because there were at least 10 people that clicked through on the links. And some of these things you can only do once or twice. When you do them, then it becomes kind of conventional wisdom. So you kind of have to be clever and creative when you execute these campaigns.
Essentially, it was a mix. I mean, Coin, just to put things in perspective, was, hey, let's figure out whether anyone would actually buy this thing, and let's do a test. So a small pre-order campaign, and let's see how it works. And we didn't have, sort of a, I mean, we had hopes, but certainly not, we didn't plan to take over the internet for 2 days, which is what we did. And I think it was a mix of this really well executed video that was really great and just worked on YouTube, that referral program that you mentioned, which essentially gave you your coin for free if you had 10 friends buying a coin. And literally, if you look at the tweets and the Facebook post, it was like a curve like that, where it was the, one of the top tweets of the day for 2 days in a row, which led to a really sort of the most successful pre-order campaign in history, which obviously you have to then, execute on and deliver all those devices. And it's never easy for a company to sort of have all this mass production figured out very early in the process. But, we'll get there. I mean, we were playing with Coin, which is very close to the end device, just before coming on board.
So where's that fine balance between doing a campaign, getting your name out there, and then somehow staying quiet so that you can go build a product in case it doesn't come
So
through?
actually I had a question for Rob. So
Yeah.
did you guys disclose how much Ness raised in funding before going?
No, I mean, it still hasn't been disclosed.
Because I think that's the key challenge for
Do you know?
for companies. So we raise, Coin and August raised cash from us. We led both seed rounds, and there were, a couple of $1 million that allowed them to really sort of put the ducks in a row, hire the team, get the product to a point where it could be sort of demoware, and they did their pre-order campaign, to demonstrate demand. That's what they raised their Series A out of. So $8 million for August and 15 for Coin. And then, you sort of work off of that to actually build the product.
The one thing that's interesting is, now with the fullness of time and more people that have gone through Kickstarter and Indiegogo, you catch them, after a few drinks or in an honest moment, and I'm not going to name names, they'll tell you the reason they did it is because they had to.
What
Not
do
that
you
it was necessarily...
What does
because-
had to mean?
Well, it was because the 3 people up here or other people declined to invest, and they kind of had to
Right.
move
For
forward.
market validation, you mean?
Yeah.
That's the Ouya story. When Roy and Julie went up and down Sand Hill Road pitching, we want to build a new console.
Oh, for Ouya.
All of us looked at them like, you are crazy, myself included. And I'm
Yeah.
their friend, I'm advising
Yeah.
them. And then they said, fine, screw it, we'll go prove it on Kickstarter. And so they proved product market fit, and went out and pre-sold a whole bunch more than we expected. And that took at least some of the product market question off the table. So at least investors feel confident, say, oh, people want this stuff. But then you still have all the headaches of, can we deliver, can we execute, and all that other stuff. But you're right, back then, if they didn't have that, it probably never would have come into existence.
The challenge is, if you go out and do a pre-order campaign that is kind of okay, like 1,000, 2,000 SKUs, but not wildly successful, which for us is tens of thousands, which is what we've seen with the most successful pre-order campaigns. It kind of puts you in a difficult situation because you haven't proven demand.
It's like a
Or
tweener,
you've
it's a
proven,
tweener
you've
state.
proven the reverse.
Yeah.
Well,
Like early adopter tweener state, yeah.
early. 2,000 pre-orders actually not bad, but doesn't prove much, right? So whereas 2,000 pre-orders is what we got on Fitbit right after we announced it back in 6 years ago. So
Have there been companies where they've had really successful campaigns, but for some reason you just sort of decided, no, I'm not going to invest? There was something wrong, there was something off about the team?
yeah, plenty. It's because you go back to, you've proven demand, but if you don't feel like the team is able to execute on the opportunity that they've created for themselves, look, it's really, really hard to put a hardware company together. And so the bar, I would say, is even higher. Like I said, we've only done 4 in 150, so, and we see a lot.
It's why it's called hardware.
It's hardware. Yeah.
Hardware.
Also, a lot of projects that do successfully, they might have a novelty factor and they might sell pretty well, but that might mean they're better geared as a lifestyle business than trying to raise a ton of venture money, which places a lot of inorganic pressure on that company to try to scale. Because outcomes we push them to might not be best suited for what it really is.
I think I'd like you to talk a bit more about that. I think that's a big disconnect for a lot of companies out here is how do you push them? And what kind of an outcome are you expecting and in what kind of a time frame versus what they want to be doing versus what you'd like them to be doing if you're going to invest money in them, meaning being venture backable.
Well, I'll be real candid here, and Basis was acquired for more than 100 million, but that was still a very middling outcome versus what we wanted and what it could have been. And for funds, VC funds that are 100 million or more, you need to see companies that are getting acquired for 300, 400, 500 million or going IPO for billions, right, to really make a dent. And so even if it's acquired for like 50, 70 million, that would normally make a lot of money for the founders and entrepreneurs, but that's viewed as a failure in the eyes of the venture investor just because of the size of our funds and the expectations we need to move the needle. That's why I say sometimes there's a mismatch.
But to this question of like what we want versus what the entrepreneur wants,
Yeah.
I never want to be in that sort of conversation. So when we invest, we have to believe that our objectives of building something big are completely aligned with what the entrepreneur wants to do. We don't even want to try to persuade somebody to do something they don't want to do. It's a pointless task. It's not good for anybody.
Yeah, but I think we're talking about two things. Persuading them to not do something versus they want venture investing because in their minds they think that's how they're going to grow a company, right? So it's a different thing for you to persuade them to do something because they're just looking at you for...
Well, there's the case where you try to dissuade them from taking venture money, and there are
because
plenty
it's
of those.
not venture backable. And that's, I think, a lot of the disconnect that happens.
It's our assessment that they won't be able to produce venture type returns, and therefore the last thing they should do is to take venture money. Right? So it's really sort of not to their advantage to try and be pushed towards a several $100 million outcome, which is the only way for us to make money
Right.
when they can't actually sort of produce that. So for us, it's about aligning with founders who have really big visions and really want to take the products that they've invented to the global market and sell millions and millions of SKUs.
So what this means, like people always go, well, what's venture backable, not venture backable?
Right.
What does that mean?
Yeah.
And so I'll peel that back a little bit. I'll say typically where venture dollars are spent well early on is where there's real technical risk and there's real technical things that are being done, because if you're creating something new, a great new experience, and it has real advantage over the competition, that's how you scale it into a much bigger company. So it isn't venture backable necessarily because it's going to be a big company. I mean, it's the dollars are going against technology development and building something that's compelling. They're not going into awareness building. So that's why when we're looking at Shasta at wearable companies, we're looking at the companies that are doing something that's a truly new capability. It could be like companies that are doing things around blood monitoring through the skin, or there's real technology there. We invested recently in Servios, and they're building virtual reality equipment. And with what they're doing, there's some real technology development in what they need to build. Now, you can ask the question of, will it be big or not? People might agree or disagree, but that's a great fit for venture capital money, as opposed to going into, well, I've got a better fitness tracker, or it goes here, it goes on my forehead, or it does this. And then if you figure it out, you've done a service to humanity, because Samsung and Apple and others are going to come in and build a great promotional and awareness budget that venture money, let alone your own money, is never going to be able to compete with.
Okay, so we're going to actually wrap this up. So feeding off of what you just said, talk a bit, each of you, about what is interesting for you going forward. I mean, for you, Jesus, you made a buttload on Nest, let's be honest.
Yeah.
So why do you want to keep investing in that space? You've made your bet,
He wants to make
you
more.
won.
Well, I think
Walk away.
there are crazy new hardware categories that are out there, and we're looking for things that haven't been done before. And we love the twist between where people think you're crazy, then you try the experience and you realize, wow, it's actually possible. VR falls into that category, because if you show me, let's put aside whether Facebook is a good fit for Oculus. In general, I'd say 99 times out of 100, and I've asked a lot of people about this, if somebody says that they think $2 billion was a crazy price, I'll show you somebody that hasn't tried the headset on.
Got it. So VR is your thing.
It's an area we're very interested in,
Right.
but it's an example of crazy new categories of hardware.
What about your robotics obsession?
We're getting close to something right now.
There we go. Tim?
So, I've been looking for things where you take what used to cost $1 million or hundreds of $1,000s, and once you get them down to the 4-figure or even 3-figure price point, whether it's like satellites or drones or all these other things, mass markets open up. And a lot of times you don't know the killer app, but you get a lot of hackers and makers who start sprouting all sorts of use cases. That's kind of the story of 3D robotics and, well, CubeSats and all those things that have popped up, right? So that's the cool part about what hardware is coming, is now so low in price point that what used to be only the realm of military or industrial or commercial can even be in the hands of consumers. So that's a really interesting, dislocation to look at.
That's super cool.
Yeah, looking at, so we have a stealth drone company. We just did a neurostimulation device company, Halo Neuro, which is completely crazy, but it's basically sending you sort of some current in your brain and making you a superhuman.
A drone does this?
No,
What?
it's Halo Neuroscience. It's
Oh.
Listen. A neurostimulation
I heard drone
device.
company
And I have another
and then brain.
drone company.
It'll be
Yeah,
delivered to you by
comes and
drone.
Just zaps you. And we're looking at commodity sort of devices that can be turned into smart devices, and suddenly you have something in the kitchen, something in the house, something in the car, which sort of betters the experience in a way that sort of creates the wow factor. The wow factor is the only way to get mass market appeal.
Wow. Thank you, guys.